Hey, how is everyone? Let me put my mic on. Turn my mic up. How is everyone? Hello, hello, hello. Let me know if you guys can hear me okay. Hope everyone, is having a great Wednesday. Hi. Hey guys, how are you in the house? I love that. How is everyone? Do me a favor. I didn't really have time to share this today on my platform. So if you guys can click security over there, the little man in the corner, and share, I would greatly appreciate it. Trying to survive the storm. Yes. You know what's crazy? I don't watch the news. So I didn't even know. I went to pick my baby up and I was like, oh my God, it's horrible out here. It was like bananas. Thank you so much for sharing and inviting your followers. It was like crazy. I was sitting up here like, oh my gosh, I need to start watching the news. Sunny Cali. I will be in Cali in April, the end of April. I'm super excited. Thank you so much for sharing. If you have not done so, click security. Let some folks in here. Yeah, I didn't know it was going to snow. I woke up and I was like, oh, it snowed today. It wasn't that bad. Oh my goodness. I did not expect it to snow like all day long into that capacity. Still need to start watching the news more, honey. I was like, really? Yes. I'm glad I met you, and thanks for sitting by me, clarifying some things in the business. Everybody follow her. She does great scopes on finding your purpose. We got a tornado warning. Lord. No. I think I'll stick with my no. Put some emojis up, Divine. Shoots, I would forget to turn off my notifications. It was on automatic. So okay, I'm gonna get started. This is about home ownership. This was selected by my group members, and credit makes sense. How to prepare your finances for home ownership. One life, keep it moving. I know that's right. So there she is, follow her. She gave great scopes on that. If you're in the group, then you know we're all about mission statements and aligning our purpose with our goals and breaking up those goals into bite-sized pieces. So definitely follow her for that. Okay, so let's get going. Nope, I haven't gotten started. I know you were one of the main ones that picked this subject. So that's why I'm doing small talk until some folks come in here. By the way, I am Nativa, the Frugal Creditista. Hi, replay viewers. Thank you so much for your support and the hearts that you guys give. I greatly appreciate it. I own M&H Credit Solutions, where credit transformations happen. And what else was I going to say? I was going to wait for, what is the name of the group? Credit Makes Sense. Credit Makes Sense. It's bit.ly/Credit Makes Sense, or you can click the link that's in my bio and it's going to take you different options, schedule consultations, join the group, all that good stuff. So, where am I? Me located? Where am I located? Damita, is that what you're asking me? I'm in Illinois. As far as financial coaching and credit counseling and all that good stuff. I do that everywhere except for Georgia. But you can call me for advice in Georgia. But based on you guys' laws there, whew, it's something else. You said no. You did. Good stuff, Miss Denise. Good stuff. Yeah, Georgia has some laws, honey. I mean, and that's why I always tell people from there to like either I have two great people who are legit, ethical, and follow the Georgian laws. I can refer you to them or use the free stuff that I do, you know, or the like I have a credit repair kit. I have the YouTube channel with a few videos on there. I have this. And, you know, different challenges and things of that sort. But as far as physical services, I can't mess with Georgia unless I am a nonprofit or an attorney. And I don't plan on doing either. Nice to meet you. But still follow me. We do great scopes. Let's get going. So you are ready to find a house. So this is about the prep work. A lot of people jump right in and they go to a loan officer. And then they're disappointed when they walked out. So I just wanted to talk about a few of the things that you can do. I mean, it's nothing wrong with going to a loan officer just to see where you are. Some of them will do, thank you so much, Miss T, for inviting your followers. Some of them will do a soft pull and help you out, especially if you're able to luck up and go to one of their, oh, thank you so much. Especially if you're able to luck up and go to one of their home buyer workshops. Sometimes they have a little I shouldn't say little, but sometimes they have a mortgage broker in the back that will do soft pulls to kind of let you know where you stand. Those are awesome sauce. And then sometimes it's a hard pull. Not that's good too. The only thing, hey, tell her tie or bow tie. Thank you so much for inviting. So sometimes you'll look up and you get one of those people. And it's great if they are. Sometimes it's a hard pull, but at least you know where you are. So let's get into it. Please do not start the home buying process without getting your financial house in order. Please don't do it. Some people will start looking right away. They choose areas that they haven't really. Yep, I'm a Dream Captures. I'm actually one of the admins there for credit. What about NACA? NACA is a good program, but just note that you will be in there for a while. Like, I have not had a client come out of NACA. Hi. Dig, why didn't I turn off my notifications? I haven't had a client come out of NACA like 9 to 12 months. I mean, some very few come out in about 4 to 6. But it's gonna, it's a program that's gonna be in a while. But you can't beat the interest rates. They're phenomenal. Okay. They're located quite a few places, so definitely look it up and at least check it out, but don't have that be your only choice, okay? Don't have that be your only choice. So how are you supposed to get your financial? Will you share ways to build credit the fastest and the best? If you check my Catch, it shows all of that. Who is that? Jamila. My Catch accounts, all my past scopes touch on credit, and how to bump it up. It touches on budgets. Like, I got a whole bunch of scopes on what I do. I'm a budgeter, I'm a goal planning sister, and I am the creditista. That's what I do. So if you go to catch.me/frugalcreditista, you will see all of that in here. This is getting your financial house in order for home ownership. So let's get going. How can you, like Tiffany? Tiffany is the budgetista. Yes, there's I think we both got it from the fashionista. Then there's a frugalista. So we all got some Eastas up in here. The travelista. We like them Eastas, okay? All right, let's get going. Okay, so getting your financial house in order. So in order to get your financial house in order, that involves the debt, that involves the credit, that involves savings, that involves budgeting. But we also want to focus on, let me plug my phone up. We also want to focus on knowing the actual requirements. A lot of people say, well, how can I get my finance in order to meet lending requirements? And then I ask them, well, have you looked up the guidelines for what you want? Most of the time, the answer is no. And thank you so much for the hearts. Tap, 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 tap the screen. I love the hearts. It lets me know I'm not talking to myself. I can do that off of Periscope. So, what are the requirements? Let's go over that. And then that'll let you know what goals you need to hit as far as your debt load, as far as your credit score, and all of that good stuff. So I can tell you right now, if you're not a vet, the most lenient one is FHA. That's like what the bulk of my clients, thank you so much, Miss Nicole. That's what the bulk of my clients get approved for. Because the down payment, the minimum requirement is 3.5%. Very few, but some lenders will allow you to have a 550 with a 10% down payment. There's probably like 3 lenders that I know of around the country that offer that. But the rest of them, yep, I started talking. I just started though. I just started. The rest of them, usually the minimum requirement is around 620. Can you? Yep, we're going to go all into that. Okay, so you can find very few who do 550, a little bit more that does 580. 620 gets you in the door for most of the lending requirements. And even at 620, your interest rate is not going to be as stellar. And the terms are not going to be as stellar. And you're going to go through some additional paperwork because, your credit score is nothing more than a risk score. So when the lender sees, okay, they meet the 620, but since they're at 620, that's a higher risk. We might want boom, 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 more additional documentation. Okay, so let's go into the first one with FHA. 3.5% down, 620 to 640 gets you in the door with most lenders. And let's talk about, because a lot of people ask me, well, if I have late payments, if I have a charge off, what will they require? Interestingly enough, it's going to vary from lender to lender. So FHA usually just states that anything within 12 months, as long as that year, the past year is stellar, they're good. However, a lender may say, well, yeah, you're insured, you're good, but we're giving the money, so we want some additional things to be met. So typically, and this is on average, lenders will require the past 24 months to be rather stellar. And if you have some blemishes here and there, credit-wise, late payments, charge-offs, or anything like that, they may require a letter of explanation. Okay, they may require, most require that they definitely be paid off or brought current, or they're going to tell you no. Plain and simple. This is the number one reason why you shop around, because one lender may be more lenient or more restrictive than the next. Inquiries, depends. If you have a lot of inquiries for like a car, a student loan, then no, they don't care about that. If you have a lot of inquiries for credit cards and personal loans, yeah, that's a red flag. That's a big red flag, because you look more risky. You look more risky. It's like, what are you doing? Applying for all these credit cards, like. And interestingly enough, the last few homeowners that I assisted, this was actually last month in the end of December, the lenders told them they did a great job by not applying for any new credit in the past 6 to 12 months. So they look at what new stuff, hi Sandy, what new stuff you have done as well. Like if you're going around applying for a lot of stuff, it's like, no, I just started building credit. I have to wait 24 months. I just, don't pass out. You're more than likely going to be an FHA. And an FHA, and this is one of the things that I want to kick on, they are pretty lenient. Like they have some is the FICO expansion score. And if you go to a community lender, thank you. I don't know if that's Brandon or Rita, but if you, just means you save more. So FHA can be pretty lenient, and some community banks can be rather lenient as well, or some other programs such as Neighborhood Housing Program, Neighborhood Works, that's NHH, Neighborhood Housing Services, Neighborhood Works, and NACA, they're even more lenient. Can you get payouts removed? So I'm missing some questions. Sorry, I'm sure. Let me answer. And then if I don't answer you, just redo it. So I apologize if I missed your question. So there could be some smooth ends. Lenders have to do that at their discretion. And I found that if you're going to a major lender, they're not going to be as understanding as a more community-based lenders. Even credit unions are usually. What if you currently have an HNAU? Then you're going to have to go conventional. If it's your second home, your rental home, nope, FHA is for the first timers or for those who haven't purchased, I believe, in the past 3 years, 2-3 years, something like that. They have a stipulation. But if you are going to your next home as an FHA user, they do allow you that. Like you're going to live in the home. Is that what you're asking me? But if you're doing it as an investment, then no, they don't do the investment thing. But if you're going from one FHA to another one, each lender has stipulations. Can you refinance? Yeah, you can switch. You can always switch. Investment, nope, no FHA. Can you get payoffs removed? What do you mean payoffs? Charge-offs? Is that what you're talking about? Okay. So, late payments. I mean, if it's an error, absolutely. Or you can negotiate a pay for agreed or pay for deletion with the original creditor. But it's not like somebody has a magic formula to getting stuff removed. But do a pay for delete, as Sandy mentioned. Okay, so late payments, yes. 12 months, definitely. That's FHA guidelines. 24 months is going to be most lending institutions. No late payments in the past 24 months. Unless it's, again, a community lender. Do you have to pay? Nope, you don't have to pay the PMI forever. You can get out of it usually. Okay, medical collections are pretty much disregarded as they always have been. Charge-offs, they usually want a letter of explanation. If it's newer, they want it paid. Okay, so a lot of people who are in like Virginia or Maryland with those super short statute of limitations are like, but the statute of limitations is passed. Yeah, they can't sue you, but if your lender tells you if you want my money to buy the house that you desire, then yes, you will have to pay it. So in that case, they don't care if it's settled. They don't care if it's paid in full. They just want the amount at zero. So credit repair can come into play in this case if you happen to challenge it. They don't have the proper documentations to fully validate the debt. Then you can get it removed. Oh, I'm going to go over the differences. Yes, I am. So this is strictly FHA. I will go into the difference between FHA and conventional in a little bit. What's the chances of removing a collection to show? Oh, well, anything can come back. Usually, though, if you want to get a... Did I miss T-Dot's question? But usually you get a collection removed because 2 reasons, right? Or anything removed. Number 1, they didn't respond in time. Number 2, they can't validate it. So if they happen to respond, it can come back on. If you want it to be validated and they weren't able to validate it, then it can't come back on until they fully validate. And typically... I say about 70% of the chance it doesn't happen. Okay. Oh, thanks, Sandy. Thanks. Okay. So now we know at least what that is, a percentage and all of that good stuff. All I did was offer to pay, and the next week it was removed. Yeah, that's what pay for delete. I lived off of that. I did settlements for delete all day long. And I teach my clients to do the same thing, like all day long. Yes, it does. Let's get into debt to income ratio. So what does debt to income ratio is? That's the amount of your debt in comparison to your ratio. With FHA, it is a front end ratio of 31% and a back end ratio of 43%. What does that mean? So, debt versus income. Debt to, oh, thank you. So the front end ratio is your housing ratio. And most of the other loan types don't really have a front ratio, but or go by it as often. Like conventional will primarily go off of the back end ratio that we're going to talk about. So let's talk about this 31% because this is a calculation that you can do on your own or get one of those calculators online. I know Bankrate, NerdWallet, Zillow, they have them. Realtor.com, they have those calculators. So the front end ratio looks at your housing expenses. Scope's grabbing for you. Thank you. I appreciate that. Okay, so the front end ratio is your housing ratio. That's your mortgage payment. It's PD, really. Principal of your mortgage payment, interest. Oh, yeah, I use FHA quite a bit for foreclosed home. So principal, interest, taxes, and insurance. So obviously they're going to estimate the insurance, and unless you provide them with a quote. But initially they're going to look at estimates. They're going to look at your debt load, and they're going to see, okay, does her debt load allow her or fit within 31% when it comes to the actual house? And so they run the calculations, and that's how they determine how much house you can afford on that. And it needs to fit within 31%. Then they look at the back end ratio. And the back end ratio, yep, PD. The back end ratio looks at your regular income and your monthly fixed, usually your fixed obligations. So it also takes into account the housing information and then your car notes, your other debts like personal loans, anything in your name as far as credit cards, all that good stuff. So let me see if I got a list. I thought I pulled one up. Here it is. So it goes off of your car information, credit card bills, car loan, child support, student loans, any other debts on your credit report. Yes, on your credit report. So that's why people be like, skim through that credit report for your life and make sure that all that stuff is in order. Now, HUD does give some leeway. I have had several clients have about a 36 to 50, 30%, for credit cards. How is that looked at if the limit is high, balance is low? What, the credit limit? Well, that's your utilization. So as far as a lender is concerned, especially one that's approving you for FHA, they're going to take, if it's low limits, I mean that your monthly output to handle all that credit card debt is not that high because the balance is high. So, I hope that's what you were asking me. Let me know if it's not. Let me know if it's not. So that's what we usually do when we do the calculations. I have ooh, you guys, I almost flashed something and there's not even a PayPal button up here. I can't be giving y'all goodies like that for free. Y'all know I'm on my coins. So there is some leeway on there for that percentage, especially with community lenders. And this is why it's so important for you to shop around. Some people go to you said OMG. Some people go to, that's a good question about the IRS. Please don't let me forget that. Some people go to one bank, their bank. I'm like, no, you have that 30-day shop around rule. Shop for your life, okay? So front end is housing. Let me pull up. I got this up. So front end is the housing ratio. It shows what percentage of your income would go toward housing expenses. So that's 31%. It's the mortgage payment, the real estate taxes, homeowner insurance. I forgot the association dues. So it's straight housing. The back end, that's 31%.